Welcome to the deep dive. Before we jump in, a quick note that this video is sponsored by Miya Solutions. They are a real estate investment and business consultancy based in Pattaya, and you can actually contact them for a free consultation. Contact details are mentioned in the description. So today we are unpacking the booming landscape of foreign business and real estate investment in Pattaya, Thailand.
Right. And our mission today is to really decode the actual mechanics of, how international investors are generating this consistent year-round income in Southeast Asia.
Yeah, and we are pulling all of these specific strategies from a comprehensive promotional guide and business breakdown provided by our sponsor, Miya Solutions. As a government-registered consultancy right there in Pattaya, we're basically using their guide as our map to navigate this entire ecosystem.
Which is great because for anyone listening to this who has ever daydreamed about packing up and moving to a tropical beach town, the information in this guide completely flips the usual script.
Oh, totally. I mean, usually when we picture moving to a place like Pattaya, the image in our heads is purely consumptive, right?
Yeah, the classic retirement commercial.
Exactly. You're sitting in a beach chair, you're sipping something out of a coconut, and just watching your savings slowly drain into the ocean. The money only flows out.
Yeah.
It's clean, it is simple, but it is very finite.
It is. But taking a close look at certain hubs in Southeast Asia reveals a financial current that's actually flowing in reverse. The beach chair isn't the end goal anymore.
It's the office.
Right, it's the office. The people sitting in them are actively generating wealth. They're leveraging the local economy rather than just, spending their pensions in it.
Okay, let's unpack this. We're going to talk about making money in Pattaya. We have to establish the foundation of the local economy first.
Which is international tourism. It's the undeniable engine driving literally everything else.
Yeah, the constant, unending flow of tourists is what makes all these traditional foreign-owned businesses possible. According to the guide, the most common sectors for foreigners in hubs like Bangkok and Pattaya are your classic hospitality venues. So bars, restaurants, nightclubs, and massage parlors.
Right. Catering to people who are there to have a good time is the traditional route. It's the most visible layer of the economy over there.
But the guide points out a very specific strategy for entering this space. Instead of flying over there, finding an empty commercial space, and starting entirely from scratch, many investors choose what they call business takeover opportunities.
Buying existing running businesses.
Exactly.
Yeah.
So they can earn from day one. Taking over an existing bar is like jumping into a moving car instead of building one from spare parts. You hit the ground running. You inherit the liquor licenses, the health inspections.
The supplier relationship.
Yeah, and most importantly, the existing staff.
Purchasing a working operation basically means you are buying historical data. Because when you start from scratch, you burn capital for 6 months just trying to figure out if people even like your concept.
Right, it's a huge gamble.
It is. But with a takeover, you can look at the books and see exactly how much revenue that specific corner location generated last December. You price the asset based on proven cash flow rather than just some hopeful projection.
But I have to push back a little on this idea. Does a constant flow of tourists actually guarantee success? Or does it just mean you're surviving in a highly saturated, competitive market? I mean, there's literally a bar or a massage parlor on every single corner.
What's fascinating here is how a continuously replenishing customer base fundamentally changes the traditional risk profile of the hospitality industry.
Okay, how so?
Well, think about how a restaurant works in your hometown. To survive, you need repeat local customers. You need a loyal base that comes back every Friday night. If your town has 50,000 people, your total addressable market is hard-capped.
So if a new, flashier restaurant opens across the street, they are actively stealing your regulars.
Exactly. But in a major tourism hub like Pattaya, the math shifts entirely. You aren't fighting over a stagnant pool of locals.
Because a new batch of tens of thousands of tourists arrives at the airport every single week.
Right, and they are actively looking for a place to eat, drink, and relax. So the source material notes that while healthy competition certainly exists, the sheer volume of the tourism industry keeps the demand exceptionally strong.
Wow, okay.
You don't necessarily need the same customer to come back 50 times a year. You just need to capture a tiny fraction of the newly arriving foot traffic every single day to remain profitable.
Right, so the moving car of the business is fueled by a literal river of transient customers. But even with proven cash flow, running a nightclub or a bustling restaurant requires incredibly heavy operational involvement. Dealing with staff turnover, late nights, inventory, it's an absolute grind.
Oh, yeah. That is the definition of active income. You are tied to the physical location of the business.
But managing a full staff 12 hours a day isn't everyone's dream. If the ultimate goal of moving to a beach town is actual financial freedom, we have to look at models that detach your time from your earnings. And here's where it gets really interesting.
The pool villa rental business.
Yes, the source material outlines a major pivot toward models that require lower upfront capital, but capitalize on shifting consumer behaviors in travel.
This model is a direct response to how the modern traveler has evolved over the last decade. They are specifically moving away from large resort infrastructure.
Yeah, the guide points out that today's travelers, especially families and groups of friends, they're shunning traditional hotels. They don't want to share a lobby or fight for a spot at a crowded resort pool. They want private luxury villas with swimming pools and complete privacy. And the strategy here isn't to buy these luxury villas outright. The strategy is arbitrage.
Right, the rent-to-rent model.
Exactly. Investors rent a luxury pool villa themselves on a long-term lease, let's say a 12-month contract. And then they list that exact same property on platforms like Airbnb, Booking.com, and Agoda for daily or weekly rentals.
So they capture the spread between their fixed monthly rent and the dynamic daily tourist rate.
Yeah, they aren't even buying the real estate. It's basically subletting on steroids. But wait. The guide specifically notes that this relies entirely on proper management and right presentation. It isn't exactly passive if you're constantly churning daily guests and handling 2 a.m. check-in disputes, right?
If we connect this to the bigger picture, you're looking at a brilliant adaptation to the modern digital economy. I mean, the operational intensity is certainly higher than owning a mutual fund.
Yeah, dealing with cleaning crews is real work.
It takes serious logistical effort. But look at why the math works so well in a place like Pattaya. The spread between long-term residential leases and short-term vacation rates is massive. You are capturing the delta between the local residential market and the global tourist market.
Ah, I see. So you might secure a year-long lease on a villa for the equivalent of a few $1,000s a month, but during peak tourist season, you charge hundreds of dollars per night.
Right. It drastically lowers the barrier to entry for foreign entrepreneurs. You don't need a massive commercial loan to buy a property outright. You just need enough capital to secure a lease, furnish it beautifully, and understand the algorithms of these international travel platforms.
All right, the algorithm is huge. The guide mentions right presentation, which means professional photography showcasing the private pool, flawless cleanliness, and rapid response times to guest inquiries.
Exactly. By mastering the algorithm, a single operator can maintain an 80 or 90% occupancy rate, maximizing that profit spread without owning a single brick of the building.
You are turning a fixed monthly liability, your lease, into a dynamic daily asset. You essentially act as a boutique, decentralized hotel operator.
It allows a foreign investor to build a high-yield hospitality business using digital infrastructure rather than pouring concrete.
Okay, so the villa arbitrage is a powerful cash flow engine, but it is still fundamentally built on a lease. You are building a business on someone else's land. If a foreign investor is seeking long-term security, they eventually want to own the underlying asset.
Which brings us to the unique legal framework of Thai real estate. Navigating that is the first major hurdle.
Yeah, and this was honestly the most surprising part of the guide for me. A lot of people assume that as a foreigner in Southeast Asia, you can't truly own property. You hear stories about having to put the deed in a local citizen's name just to buy a house.
Right, it's common misconception.
But the source material clearly states that foreigners can legally own condominiums in Thailand with 100% ownership rights.
Yeah, and just to be clear for the listener, we are talking about a freehold title. Freehold means you own the property outright forever. You can sell it, you can pass it down to your kids. In many neighboring countries, foreigners can only get leaseholds.
Which is like a 99-year rental agreement from the government, right?
Exactly, but Thailand's Condominium Act actually lets you hold the deed in your own name, provided the building caps foreign ownership at 49% of the total floor space.
Wow. That legal protection fundamentally changes the risk profile for an international buyer. Plus, Pattaya property prices appreciate at an average of 7% per year. But then the guide outlines what they call a smarter way to invest, the pre-launch strategy.
Buying during the early construction phase.
Yeah, long before the building is actually finished. The guide gives the specific example that breaks it down perfectly. Say you invest 2 million Thai baht to purchase a condo off-plan during the pre-launch phase. Because you are buying early, the price is significantly lower than the final market value.
Right.
By the time the project is completed, the property's value has often increased by 20 to 25% or more. Plus, you still get that 7% annual appreciation, and you can rent it out to tourists for monthly passive income. So what does this all mean? You buy a 2 million baht condo on paper, and by the time you get the keys, it's already worth a quarter more. It sounds like a financial time machine.
It really does.
But isn't there an inherent risk in putting capital into a property that is literally just a blueprint? You're trusting that the developer won't go bankrupt before pouring the concrete.
This raises an important question. And you're right, construction risk is the absolute core of this strategy. Delays happen, supply chains break down, projects stall. But that risk is precisely why the 25% discount exists.
Okay, explain that a bit more.
Think of it from the developer's perspective. Real estate is highly capital intensive. Banks often require a developer to pre-sell 30 to 40% of a building before they will release the massive construction loans needed to actually build the tower.
Oh, so the developer is essentially paying you a premium to absorb that initial timeline anxiety so they can unlock their bank financing.
Exactly. They offer steep pre-launch discounts to secure your early capital. You provide the liquidity that gets the project off the ground. And once the building is finished, that construction risk evaporates.
And you now hold a tangible asset that is locked in that early equity gain. That's when the dual income engine kicks in, right?
Yeah, the capital appreciation combined with the rental yields. Your asset grows by that average of 7% a year while spinning off monthly cash flow from tenants. It transforms the investment from a speculative play into a robust wealth-building strategy.
Okay, so we've established the what and the how of making money in Pattaya. We explored the active hospitality takeovers, the pool villa arbitrage, and the dual-engine condo investments. But there is an obvious elephant in the room here.
The logistics.
Yeah, how does an international investor sitting in London or Mumbai or New York actually execute any of this? How do you run a villa arbitrage or manage a 2 million baht condo from thousands of miles away? You can't manage an Airbnb dispute over a Zoom call.
The physical distance is the ultimate friction point for any international investment.
And this is the exact gap that Miya Solutions fills. As a government-registered company, they act as a one-stop solution. Their services cover literally everything: business takeovers, land purchases, construction, interiors.
And vital property management.
Exactly. Finding tenants, handling maintenance, dealing with a broken air conditioner at midnight. And to bridge the international gap, their team speaks English, Thai, Hindi, and Marathi. It's essentially a business-in-a-box service. You provide the capital and the vision, and they provide the local boots on the ground.
Right.
But handing over the keys and the maintenance of your investment to a third party requires immense trust. You have to rely entirely on their execution. If they drop the ball on cleaning your villa, your Airbnb rating tanks, the algorithm buries you, and your arbitrage model collapses.
That is the inherent trade-off of remote investment.
Yeah.
You are exchanging direct control for geographical freedom. And localized consultancies are strictly necessary in high-growth foreign markets because the true bottleneck for foreign investors isn't usually a lack of capital.
It's friction.
Exactly, it's friction. Navigating local zoning regulations or understanding Thai corporate law is incredibly difficult if you don't live there.
Not to mention the language barrier.
Right. You can have all the money in the world, but if you cannot read the contract or negotiate with the local maintenance crew, your capital is paralyzed. Looking at the languages Miya Solutions provides, English, Thai, Hindi, and Marathi, it paints a very clear picture of the demographic flow of investment.
Capital is flowing heavily from the West and from India.
Yeah, and these investors require a trusted interface. Without a facilitator who understands both the expectations of the foreign investor and the realities of the local market, the friction makes the investment mathematically impossible.
So services like this become the linchpin of the entire ecosystem. They reduce the operational friction, allowing the investor to focus on capital allocation rather than daily logistics.
It really provides a comprehensive look at how global capital adapts to and extracts value from localized tourism booms.
It is a fascinating ecosystem. We briefly recap the journey from active hospitality takeovers to the clever pool villa arbitrage to the dual-engine condo investments and finally, the crucial role of local facilitators.
A highly functional machine running on international demand.
Truly. Whether you are actively plotting a move to Thailand, or you simply love dissecting the mechanics of international real estate and clever business models, Pattaya's ecosystem offers a fascinating masterclass. But before we sign off, I want to leave you with a lingering, provocative thought.
Okay, let's hear it.
We've spent this deep dive exploring how easy it is for foreigners to buy condos and run short-term rentals. But when a city's real estate and local business landscape is fundamentally designed for and increasingly owned by a transient global population, what does that eventually do to the local culture and the permanent residents who call it home?
Yeah, the invisible cost of the microclimate. That's a huge question.
Definitely something to mull over the next time you book a private pool villa. Thank you so much for joining us on this deep dive. Keep questioning the world around you, and we'll catch you next time.